Investing in stocks for the long term requires a strategic approach focused on growth and stability. Here's how to do it. Educate yourself. Understand basic stock market concepts, financial metrics, and investment strategies. Read books, take courses, or follow reputable financial news sources. Set clear goals. Define your investment objectives. Are you saving for retirement, a child's education, or another long-term goal? Knowing your goals helps shape your investment strategy. Create a diversified portfolio. Spread your investments across different sectors and industries to minimize risk. Include a mix of stocks from various companies, as well as other asset classes like bonds or real estate. Choose quality stocks. Look for companies with strong fundamentals, including consistent earnings growth, solid management, and a competitive advantage in their industry. Blue chip stocks are often a good choice for long-term investments. Regular contributions. Invest regularly through dollar cost averaging, which involves investing a fixed amount of money at regular intervals. This strategy reduces the impact of market volatility. Reinvest dividends. Choose to reinvest any dividends earned from your stocks back into purchasing more shares. This can significantly enhance your returns over time. Stay patient and disciplined. Avoid frequent trading. Stick to your long-term plan even during market downturns. Long-term investing relies on the market's overall upward trend. Review periodically. Periodically review your portfolio to ensure it aligns with your goals. Make adjustments if necessary, but avoid reacting impulsively to short-term market fluctuations.